I've been getting a lot of refinancing offers from different lenders, and I'm wondering if this is something that I should take advantage of. And what does it even mean to get a refinance? Should I even do it? If you're facing that exact same dilemma, well, let me tell you that you actually arrived to the right channel and the right episode. Hello everybody, and welcome back to another episode at Rise Invest. If this is your first time tuning into this channel, let me tell you, well, this is your channel for real estate education. So today we're going to talk about refinancing. I've been getting a lot of questions from you asking if you should even pursue one, because you've been getting so many offers in the mail and you keep hearing everybody talk about it. And you are wondering if that is something that is convenient for you to even pursue. So for that, we're going to go straight into the board. And before we dive into the analysis of whether you should actually pursue one or not, let's just talk about the type of refinancing available in the market. So we have two types. One is just the traditional refinancing. We're going to call it refi. And there's another one that it's called the Cash-out Refi. So how does a traditional refinancing work? You have a house, and let's say that house costs $200,000. $200,000, you know, your down payment, whatever, and you still owe $150,000 in that house. So $150K, and your rate is at 6%. So you got an offer in the mail, and that bank or that lender is actually offering you to refinance this amount, $150,000, but this time they're willing to give you a lower rate because the rates are low nowadays, and that will be 3%. So that is in essence one type of refinancing. The second type of refinancing, so let's say for example, once again, you have a house, a property, and you pay $200,000. Over time, you manage to pay down the debt. You actually bought the house with a higher down payment, and let's say, why not? The house appreciated over time, so you managed to accumulate a good amount of equity. So let's say that your equity in this house will be $100,000, right? So a cash-out refi, it's when you go to a bank and you say, you know what, I want to do a cash-out refi on this. So what the bank does is they will create a mortgage, a new mortgage, and they're going to give you $100,000 cash for you to spend it on whatever you like. Ideally, you will spend that in real estate investment. And what you will do is that you will sign a promise to pay the bank over the course of 15 years or perhaps 30 years. So in essence, it's a mortgage, but it's a mortgage where you actually receive cash. Rather than you having to pay the mortgage, you receive money. And that's a cash-out refi. For those who are actually interested in learning more about the subject, maybe you're new to the channel, down in the description box below, you're going to find links to all the multiple episodes that I've created in the past where I've talked about this excellent tool for you to expand in real estate investment. But today we're not going to talk about this. Today we're going to talk about traditional financing in general. So now that you understood what it is about, I want you to consider other expenses, right? So every time you go through a refinance, you are basically creating a new mortgage. You're creating a new mortgage, and that means you will have to provide your tax returns. The bank is going to have to pull your credit. You're going to have to show your pay stubs and fill up application forms, pay for an appraisal. The whole ordeal that signing up for a mortgage involves, right? So, and that includes having to pay, once again, for appraisals. That includes having to pay for your credit report, because you know the lender has to pull it, but you have to pay for it. So your credit report, we're talking about lawyers or attorneys, because depending on the state that you are, you will probably require one at closing. So we're talking about attorneys, perhaps a title agency, and the list goes on, right? And I'm saying this not to get you scared or to get you abandon the idea of doing a refinance, but what I want you to do is to consider these expenses. You can choose to pay these expenses separately on your own, or in the refinance, you can actually choose to get whatever the cost of this was into the mortgage itself, so that way you can repay that over time, but with interest. I don't recommend it, but it's always an option. And now that you know all of that, the question once again is, should I refinance? Should I refinance this, or should I just move on? Well, it depends. It depends on how much you owe in that mortgage. So if the house costs $200,000 and you still owe $150,000 in it, and you're getting the opportunity to reduce that interest rate from 6 to 3%, yes, please take it, because you will definitely save a lot of money in it. But if whatever's left on that debt, let's say instead of $150,000, it's $20,000, right? Then it's not worth it, because the closing cost is going to be roughly 3 to 5% of the amount that you're refinancing. So you're spending a lot of money in fees for such a small amount. And yes, granted, I know that $20,000 is a lot of money, but $20,000 can be something that you can easily pay off with a credit card at a 0%, right? And for those who are tuning in for the first time, who have not seen that video, I actually created one that can show you how you can pay off your mortgage faster using your credit cards. And the link is right here down in the description box below. But don't check it out yet. Wait until the end of this episode. Back to the board. If you're owing such a small amount, it's just simply not worth going through all of that hassle just to refinance $20,000. Do it when it's such a large amount, because over time, you don't want to end up paying a lot more in interest than your house is worth. And now the next step is, okay, so how do I know which lender is more convenient? Well, you will typically choose the one that has the best rates, or the ones that give you more flexibility in terms of payments, maybe longer years, maybe shorter years, depending on what your needs are. And that's it, everyone. That's everything I have for you today. Hopefully that helped you answer all of the questions that you had in terms of refinancing, and hopefully you're in a much better position to decide whether that's going to be the right thing for you to do or not. And once again, if you have not hit the like button, just do it right now, here, right here. And don't forget to check out this episode right here. That's going to help you complement everything that you learned right here today. That's pretty much it. And without further ado, I'll see you guys next time. Take care. Bye-bye.